Coach Matt for Tackle Trading here. Wanted to walk you through a couple different things in Thinkorswim and also show you how to manage a credit spread out there. The first thing is Thinkorswim is such a robust platform that you can hit this on-demand button right there and it will actually pull up any day in history that you want to practice. So if you want to practice like a big down day in the market, how to respond to that, you can pull up that and pull up, a certain date and say, okay, I want to trade this date and see how it works. You can do it in currencies, you can do it in options, you can do it in the marketplace itself. So I'm going to hit the jump to button and I'm going to go back to December, we'll say December 2nd, and we're just going to change the date to 8:30 my time, which is an hour after the market opens. And so now it's pre-buffering here. It's going to take a minute. It's a very robust platform, so it's a little slow. So now, as you can see, we're now on December 2nd at 8:30. I'm going to go to the trade tab and I'm going to type in Netflix, NFLX there, and I'm going to go out to January and we're going to right click once it kind of buffers into here. We're going to right click on the 370 strike price. We're going to sell that. We're going to do a vertical and we're going to do, let's do just 6 contracts just to show you kind of how it is. We're going to receive $1.25 per credit. We're going to confirm and send that. So we're going to have $750 of credit. Its margin is $2,250. So that's a very good credit on your margin. Got a wonderful ROI on that trade. And now we're going to confirm and send. And as you can see, it has now filled. Right here, Netflix, it's filled. So let's go ahead and add one thing to that. Let's add net liquidation value. We've already done it. Okay, so now we've made the trade. Netflix, this is a January strike price. We're back on December 2nd. It expires the 3rd week in January. Now, to manage a credit spread, you manage it in multiple different ways. You manage, basically at expiration. You manage it at the strike price you sold of 370. You never want to let Netflix go above 370. And so we're going to manage it on a daily basis. If Netflix ever gets close to 370, we got to take some action in terms of rolling it down and up and out, or buying back the call option we sold, or whatever the case is. We have to do something to manage that trade. And so the first thing that you want to do on a daily basis is manage this net liquidation value. When I made this trade, we had $750 of the max we can make. It costs $3,000 in margin to make that $750. And so every day I'm going to make sure that I'm managing how much money I can make left versus how much money is actually in the trade. So now let's fast forward in time to, say, a week later. Let's hit that go button. And now, as you can see, we're kind of buffering here. Give it 1 second. It does take a little bit of time to buffer this. And as this is buffering very quickly, now as you can see, okay, a week later, 1 week later, on December 9th, we have already profited $375 of the $387. We still have $3,000 in margin requirement to make now, not $750 because we've already made $375. We now have $3,000 to manage $385. So even though this is a January option, I have to ask myself, is it wise to keep $3,000 in the market to make $387 when I've already captured 50% of what I could make? And so I probably would keep it on. And now let's jump to, say, 2 weeks later. Let's hit the go button. And again, I'm managing that net liquidation value because the margin requirement is going to be the exact same regardless of if you've made this amount of money or you're down this amount of money or whatever the case might be. So now we go fast forward a couple weeks, and now we're back down to 282 because Netflix has went up and down over the course of the last 2 weeks. And so I still have $3,000 in. I've now only up $282 because Netflix has went up a little bit if you'll look at the chart, and so I still can make $474. Now I only have 24 days left in the trade. I had 45 days when I first entered into the trade, so I'm just going to continue to manage, let it go, and we're going to say let's jump forward now another week or so. And let's hit that go button. As you can see up here, it's pre-buffering, which means it's trying to pull the data. Once again, a massive, massive program when you're talking about including all the different strike prices and options and whatnot. Now, okay, now we only have 16 days left to expiration. We're up $558 in the trade. We have $200 left in the market. We have $3,000 in the market to make $200. You have to ask yourself, you've already made $558. You can only make $200 more. This is a fantastic trade at this point. Should you continue to have Netflix in the market to have that $3,000 simply to make $200? We still have 16 days left to expiration. I'm going to say you might want to start locking in profit there, but at the same time, let's just kind of see how it works. And so let's now go to the, we'll say the 2nd, which is the last Friday, which is the last date we have. So we're going to pre-buffer. Noah and Gino talk about Theta Christmas and whatnot. Theta's really worked on this trade throughout the last few days. Okay, now as of last Friday, we have made 510, which still got $252 in the trade. So now let's just get out of the trade. Right click, close that trade, buy it back, put it at the mid price, confirm, and send. And we made $500 on the trade, and that's how we manage a credit spread. We don't just manage the theta at expiration. We manage the net liquidation value on a daily basis, because at some point, if you have X amount of margin requirement to generate, just a little bit of money, that's not a good use of money. That's an inefficient use of money. So for example, if we sold something and we received $1,000 on that credit, if we've already captured, 70% of that, why don't you just lock it in? Why don't you just take the profit and run? You don't know what the future holds. You know what you have today. You've already made 75% of the trade like we did on Netflix, so just close the trade. So this is Matt Justice for Tackle Trading, showing you guys how to manage a credit spread as well as use the on-demand system within Thinkorswim. Hope you enjoyed that, and check everything else we got out there at the website at www.tackletrading.com.